Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Stephanie Campbell, the Managing Director of the Houston Angel Network and General Partner of the Artemis Fund. Stephanie, thank you for joining us.
Paul, thanks so much for having me.
So what was your background before investing in early stage companies? What did you do before this?
So prior to moving to Houston and getting my MBA at Rice, I spent 5 years on Capitol Hill in Washington, D.C., advocating for clients in Southern California, mostly in the transportation, infrastructure, and healthcare space. So I helped businesses and cities and states advocate for regulatory change and funding from the federal government.
Well, great. And so what excites you right now? What do you think is great going on?
What I find exciting right now is a focus on doing both well and good. I'm really thrilled to see the Business Roundtable, for example, coming out with guidance for businesses, not only in the business space, but also in impact, how they treat their employees, how they treat the environment that we live in.
Well, that's interesting. So let's talk more about that. What do you think is the implication of that? Where do you see that going?
For us at the Artemis Fund, I think that it means there will be a renewed focus on companies that make a difference in the world, that solve real world problems, and solve problems for overlooked communities like women and minorities. And the people that tend to create the most successful businesses are the ones that experience those problems and that care deeply about them, which is why we have a focus on female founders. We truly believe that they are overlooked and undervalued opportunity that traditional VC firms are missing out on.
So what's your advice for those female founders? What can they do to better raise funding?
I think females are incredibly good at relationships, whether advocating for their children or their spouses or their communities. One of the things they could do is bring that to the fundraising aspect of their life or for their business. I don't know how many times I have been at an event, either a fundraising event or social event in the ecosystem, and I hear on the side of my view, "Oh, let me tell you about this deal I've got. It's a great deal. You ought to invest." And it typically is a male voice. But I'd like to hear that more from female founders. I think recently I was at a presentation at the Business Partners event. We have these quarterly learning seminars. And the speaker said, you have to work harder than everyone else and roll the dice. And I think what women are afraid to do is take the risk, afraid to ask, afraid to use their networks in the same way that they do for their community, for themselves. And so just be brave, ask. You never know what an investor might say.
Well, that's great. Love to see more women get into running companies. And also on the investing side, how can women get into startup investing?
Yeah, this is something that I think is desperately needed. Most investors that I meet tend to be male, and some of our most greatest supporters, the Artemis Fund, have been male. But what we find is that women typically have never been asked to invest, and they lack access and they lack education. So one of the things you can do is just get educated about the topic. Join a local angel network like the Houston Angel Network or like yours. Go out, ask people that you know, trusted advisors like your wealth advisors, your attorneys. They tend to be pretty active investors and understand the space. And then listen to podcasts like this. I listen to quite a few. I follow all things investment on Medium. And then there's some books that you could read like Venture Deals, which could help educate you about the types of terms and things that seem like Greek when most people are talking about investing.
Well, there's quite a few resources out there for getting into startup investing, and those are certainly very good ones. So if you look at the state of women investing in startups, we've been talking about that as a diversity topic for several years now. How do you see that discussion evolving? Where do you see it going at this point?
Yeah, I think that I see a lot more of female-led angel groups starting. I see platforms like Portfolio starting up where there's low barriers to entries where you can get in at a small amount, say $10,000 entry point, and learn the process, either the investing process or a new industry that you might not be aware of. Same thing with angel networks. I'm seeing a renewed focus on angel networks trying to diversify their membership, and that's a huge prerogative of the Houston Angel Network, for example, is that we want to see more women investing. I think that's shifting. You do see some changes in terms of women-led venture firms. So for a long time, it was hovering around pretty much zero. Last year, it was 9% of decision makers in venture capital were women. This year, it's 11. So we're seeing small changes. I don't think fast enough, but you're starting to see changes. We believe that when more women are investing, more women get funded because women tend to invest in things that they understand. Women are creating solutions for things that they understand, problems they understand. But it's been sort of steady state in terms of female receiving venture capital funds. So last year it was 2% for women-led teams. This year it really hasn't increased. It's even worse for minority founders. It's 0.2% of venture capital. So we still have a lot of work to do.
What do you think is going to drive that change? Is it just having more good examples of women investors? Or is it having good exits that they can bring to the table? Or what do you think might drive the change faster down the road?
Women actually outperform when they receive venture capital funding. So there's plenty of data that shows out there that when of that 2%, right? So that 2% that goes to women every year, those women that actually receive that funding, they tend to outperform their male counterparts in terms of overall value to the fund and returns. So they are creating examples of exits. They're just being overlooked. So that's one point I just want to correct. Women tend to have more realistic expectations and deliver. Mr. Wonderful or Kevin O'Leary was recently quoted in the headline saying that he prefers investing in women because bottom line, they've made him more money. And so I don't think that there are a lack of deals out there. I don't think there's a lack of examples of great female-led deals that are having good exits and growing to billion-dollar businesses. I think we need to change I think there needs to be more women investing, more women looking at these companies, more women making the decisions in venture capital firms. And I think that'll really move the needle.
So part of the Artemis Fund, which focuses on women-based startups, what is your investment thesis for it?
So at the Artemis Fund, we're looking for companies that are raising a seed to Series A round. We're looking for tech-enabled companies led by women. We're looking for companies that have received significant traction or achieved significant traction with very little. We tend to find that by the time a flag company comes to us at the seed round, they've got significant customer or revenue traction. Looking to partner with a female fund that understands their values, that's really important to us. We're just really looking for a company that has a strong path to profitability. We are looking for high growth, but we're looking for sustainable growth where we can expect a good return.
Do you have any portfolio examples you can talk about that fit that thesis?
Yeah, we do invest pretty broadly. So we're a pretty generalist fund. So we are looking for tech-enabled companies, but three key areas where we want to focus is fintech. And there's been some reports that say women in fintech tend to outperform. We're looking at life tech, so anything that helps take care of your children up to your aging parents and pets in between. Women tend to be the caregivers. So reducing that friction of household CEOs and working moms. And then energy and sustainability. I mean, we're in Texas, the capital of energy. We're looking at smart cities, things where Houston, for example, really excels in terms of tech, robotics, cybersecurity. And then clean tech, if it doesn't take $100 million to get to scale, we're out of the lab. So those are the three areas. The first two investments we made, the first was a fintech company called Unest. We've led that round, backed by Invesco and some great co-investors. That was a $2 million seed, so that's about the average deal size we're looking for. The second company is called Hop Skip Drive. It's pretty much caregivers on wheels. So you can schedule your children's transportation from school to activities. They also support foster care systems in school districts. That company is doing incredible in terms of revenue and will be profitable after this raise, which is something you don't see with someone like Lyft or Uber, right? They also insure the cars for $1 million every driver. So this is fantastic. Both of these founders had received such significant traction and achieved great things by the time they came to us to raise their first round. So that's what we're looking for. Resilient, tenacious founders that deliver.
So for the startups you see out there today that you're considering, what are the challenges they face in launching and running their startup these days?
I would say the biggest thing that we find is a lack of human capital. So once you do raise that round, most projections are it will take you out 12 to 18 months. But if you haven't already figured out who it is that you need to help you grow and deploy that capital and hire that sales team or development team or whoever you need, you forget that it takes potentially 6 months to hire those people. So the biggest issue we find is human capital, finding the human capital and really have already talked to the people that you know that you need, and you have them ready to bring onto the team and get ready and get rolling fast after you receive capital. That's usually the biggest issue. Talent and knowing where that talent is and bringing them on quickly.
And so what sectors and applications out there in the broader range of startups do you see as good opportunities for investors to pursue in this time frame?
Yeah, I mean, for us, we're always looking at companies that have found some kind of a white space. So they really understand their customer. They're not just doing Facebook, Google ads, Instagram ads. That's something that we hate to hear. I want to know that you really understand your customer and how to get to them. Some of the specific industries that we think there's a lot of opportunity for white space is definitely fintech. We're really excited about financial literacy, financial empowerment, new ways to connect people and capital. That builds trust and safety. And it also builds wealth for women. That's why UNES was one of our first investments. We're really excited about the opportunity to democratize college savings to more than people who have financial advisors.
Very good. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think the most important thing I would like to say to the audience is get involved. To women out there listening who are investors, to women founders, everything doesn't have to be perfect. Start talking to investors, start talking to them early, and start talking to women in your community and get involved. I think that's such awesome things happening in Texas and in Houston and Austin specifically and in San Antonio recently. I'm just really excited about the future of Texas. And I think you and I are both part of that. And I'd like to see more people get engaged.
Well, great. Well, how best for listeners to get back in touch with you?
Feel free to reach out to me either via email. I mean, my email's on both the Artemis and the Houston Angel Network websites. I'm pretty easy to get to. Connect with me on LinkedIn. Always happy to spend time speaking with people, investors and founders.
Well, great. We'll put those in the show notes and want to thank you for your time today and hope to have you back for a follow-up soon.
Thanks, Hull. This was great.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.